SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back, and you are listening to the Financial Survival Network. And man, a lot's happening in energy and precious metals. And you can't even turn on the television now, and you see what's happening in the Middle East. But hey, as far as prices go, well, we've got Chris Vermeulen back with us now from the goldandoilguy.com. You know him well. We've told you about his bio from 16 years old. He was hooked on the markets. He's the founder and chief technical analyst of the Gold and Oil Guy, and he started in 2000. Extensive experience trading stocks, indices, and ETFs and futures. And well, we'll get into it. Chris, welcome back.
Thanks, Kerry. It's great to be here.
Hey, so the precious metals sector, man, looking really, really well poised, isn't it?
It is. It's been working through some consolidation here the last couple of years, but overall it is forming a very solid basing pattern, and it looks as though it's bottomed and it's in the middle of a basing pattern. Looks as though it has probably a couple more months to go before it'll actually break to the upside. We'll see gold, silver miners explode. That's as long as it can break out of this basing pattern that's been working through since about April. So overall, it looks really good. I still think it's a little short, a little early to be dumping money into it. I like to get in after some confirmed breakout, but yeah, it looks to be holding up and looking very bullish long term.
It looks really good for silver, though. Silver looks like it may very well have bottomed at this point, doesn't it?
Yeah, both. Usually silver, the more silver underperforms gold, the better. It seems that when silver really starts to underperform, it goes to show that speculative traders are really giving up on precious metals. They're getting out of silver. And usually when you see silver underperform, that is a sign when usually the precious metals market is nearing a bottom, if not bottom. So that's pretty much where we're at today. And it looks as though silver is going to have a great upside move percentage-wise compared to gold in the long run. So,
yeah, I mean, silver lost better than 60% from its peak. Gold nowhere near that. So the potential for the upside definitely has got to be higher on silver, right?
Yeah, for sure.
So miners, that is the Maytag repairman part of the stock market. Everything else in the stock market gone way, way up except the mining sector, huh?
Exactly, yeah. Gold miners are starting to show some life. Particularly the gold junior miners, they seem to be outperforming, and we're seeing some big volume move into miners. It doesn't matter what the miners are, as long as they're the large cap gold or the gold juniors or even silver miners. The money has been flowing in here the last couple of weeks, and again, the chart patterns are building beautiful basing, bottoming patterns, and we tend to see the smart money, the leverage money move into these small cap stocks before we see physical gold. So looking at the chart of the GDXJ, which is the gold junior miners, it is the one that's actually moved the most. It's actually broken a couple minor previous pivot highs on the chart. And to me, it started, it's had its first impulse wave to the upside. So I think a couple day pullback here in gold miners, I think it could be a great opportunity to stick your toe in the water and get in on this early, because it looks as though the short-term momentum and trend is reversed to the upside in miners. So
you got $10,000-$15,000. You put it into some junior miners, or do you go for the index?
If $10,000 is all you have, I wouldn't put it all in there, obviously. But I out of all the charts out between gold, silver, and the different mining ETFs, I think the GDXJ has got the sexiest looking chart. On a technical standpoint, it's got upward momentum, it's got volume. It's the most speculative way to play gold, and that's where all the big money seems to be going first, and that's where it typically goes first. So the fact that it's setting up and has broken some key resistance levels and showing real strength here, relative strength compared to everything else, that to me is the best play.
Mm-hmm. And, almost the inverse of that, I was looking at the housing sector in the U.S. and looking at these home builders, and they've all done these head and shoulders tops that are just like astounding that the mainstream media, the technical traders have not been shouting about these things the way they've peaked,
Mm-hmm. Yeah, true. Yeah.
So
yeah, I did a recent article on how gold and oil are fueling the Canadian stock market rally right now, and how the Toronto stock market is more or less heavily weighted with resource-rich stocks. I'm in Canada here, and we're a resource-rich country. So I did an article about gold and oil fueling the recent rally in the TSX, and really, typically during a U.S. Stock market, a bull market, when it's coming to an end, we usually see resource-rich stocks, and we see commodities, and we see the Canadian stock market actually start to pick up speed. Now, the TSX generally underperforms the first 3 quarters of a bull market that happens in the States for equities, but it plays catch up in the last quarter, and that's what we're starting to see now. We're starting to see the Toronto Stock Exchange, which is one of the best performing indexes this year, is picking up speed. We're seeing gold start to bottom. We're seeing gold stocks firming up. We've got oil prices starting to rise. The commodity index itself looks as though it's bottomed, and it's forming a basing pattern, much like precious metals itself. And I think commodities in general are going to start to really firm up here and start to rally to the upside. It's going to lift the Canadian stock market to new highs, and we're going to see it take off for a few months here.
What about the Canadian dollar? Are you bullish on that as well?
Believe it or not, I'm actually bearish on the Canadian dollar. It looks as though the U.S. dollar is holding up fairly well. It doesn't have the strongest looking chart, but overall, I have a feeling that the Canadian dollar is still going to be under pressure and continue to go down in value.
Yeah, you still do have a housing bubble north of the border, don't you?
You know what? I don't follow the housing market too closely, but we have had a very good couple of years in the housing market, and we're probably getting it's probably starting to get a little soft.
Yeah, all you have to do is watch all the housing shows, and you know that there's a bubble ahead, right?
Oh yeah, they're everywhere.
Flip this house, and they're coming. They're producing them all in Canada. It must be a lot cheaper to produce those shows
probably
north of the border than in the U.S.
Yeah,
and plus they're better. So interesting. So the TSX really is heavy on resource, on oil stocks, on precious metal stocks, which is why it's gotten killed over the past few years. But now it's showing new signs of life as a result of what's probably coming ahead. And,
exactly, yeah.
And the smart money knows it, doesn't it?
Yeah. I know a lot of Canadians are extremely frustrated with how the Canadian stock market has moved. We've seen the U.S. markets rally and make new highs, continue to make new highs, and Canadians are just sitting here watching, everybody south of the border make all this money and gains on their capital, and they're sitting here treading water, hoping they can get back to where they were several years ago. But now we're getting to the point where I think finally everybody's going to see some light at the end of the tunnel. We're going to see the TSX really pick up speed and make some new highs, and that'll really help. I think the economy and morale in Canada alone. Just everybody's so tired of being still below their peak, from years ago with their retirement account. Once that cracks, I think it's actually going to make a big change in just the vibe with everybody here.
Yeah, it's definitely been pretty depressed. You go to these hard asset shows, these mining shows, and you'd think you were at an Undertaker show or something. It's the attitude there. It's just you don't even want to go.
Well, everybody's been depressed for so long, right? The metals have been going down, oil's been going down. You can only take that for so long before you just start to get real bored of being positive. You just sit back, let your investments kind of do whatever. So precious metals are totally out of favor right now. They're the lowest levels they've been in an extremely long time, and that's usually the sign of a bottom. Everybody's given up. Everybody's ignoring it. They're holding. The people who have been holding forever aren't going to sell anymore. They're just holding it. So I don't think we have big waves of sellers and panic selling in the market. Everybody's kind of, time heals all wounds. Everybody's given up. They've sold out already. If they haven't sold out, again, they're just holding for long term.
Yeah, but then, the first signs of the rally, how many people are going to believe it? There's going to be a lot of naysayers, right? A lot of disbelief taking place. At what point does the rally, once it comes, does it have credibility?
There's some key technical levels. I'm a technical trader, so there's some key technical levels we've got to see gold miners reach the index, and we've got to see gold and silver break through before I think it'll be confirmed there's an uptrend in the market. And it's on a percentage basis, it's quite a ways up from where we are now, but it's best to be confirmed and ride a trend than to try picking a bottom that just keeps falling out from underneath you. Yeah. So that's kind of the way I go. There's always this low risk, safe point to get into the market. You don't catch the bottom, you don't get out near the top, but you can catch a nice middle section that has very low risk, and you get in and you ride it, and you get out when the trend reverses and confirms that it's now turned down. So
yeah. And this will be a multi-year rally in all likelihood, huh?
Yeah, I think it'll be a multi-year rally. I think there's a couple ways it could go. It could be a multi-year rally, or we could have some significant things unfold where it really rockets straight up and then it comes straight back down. But I think over time, I think it's probably going to be about a 2-year rally to the upside, and we'll probably see $2,400-$2,600 an ounce. So that would be the first major target for it to reach.
Mm-hmm. Yeah, well, it's been kept down for so long that when it does finally take off, you could see a substantial move to the upside for sure, right?
Yeah, and I think the biggest upside really is in the gold miners. They're back down to levels that they were before gold was anywhere near $1,200 or $1,300 an ounce. So I think when things take off, I think gold miners are going to be extremely powerful tool to have in your investment, into your portfolio.
All right. Well, when we come back, let's talk about energy, where that's heading, because the mood there has definitely not been depressed like in the miners for sure. On the Financial Survival Network.
FSN Radio. It's all about what's next.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at noconstitutionzone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's noconstitutionzone.com.
The Financial Survival Network. It's all about what's next.
And we are back on the Financial Survival Network. We're talking with the man here, Chris Vermeulen. And Chris, so what's happening with energy here? I mean, everybody's making money at these prices at $107 a barrel, right?
Yeah, they are. And there's a lot of excitement going on in the crude oil industry. We're seeing, on the price chart, looking at the price of crude oil, where the market's been trading sideways for quite a few years here, and everything has worked itself into more or less an apex, and it's right at a point where eventually here we're going to have a massive breakout either to the upside, or we're going to have a major meltdown to the downside. And we've got this recent news going on overseas, so we're seeing a lift here in crude oil. Crude oil is up, tagging some major multi-year resistance levels, previous highs on the chart, which is why it's kind of stalled out here and hasn't really taken off and rallied. Overall, I think crude oil is probably going to stall out in this 106, 110 area, and that will bring it right to the upper end of its range and this apex pattern that eventually, once it breaks out of this, it's going to be a huge opportunity, whether it rallies and takes off to the upside or breaks down and goes all the way back down to the $55 a barrel level. It's going to be a great opportunity. But until then, you really don't want to get involved. I don't get involved when something is getting squeezed into an apex, and when it breaks, it's going to go big and it's going to go fast. You don't want to be caught on the wrong side. You got to wait for confirmation, wait for a breakout, wait for it to be confirmed that it's not just a blip on the chart, and then you can get involved and play that new trend.
Yeah, it makes sense. And I mean, look, you see the supply from the U.S., it just keeps going up and up and up. And I saw a report that said that the U.S. basically satisfied 84% of its energy needs last year from domestic supplies. And at this rate, a couple of years, it's going to become a major exporter of energy. And you see that, and you have to wonder, if all the naysayers are wrong about everything they've said for the past 25 years,
Yeah. I think there's gonna be a big change, I think, in the oil and the natural gas industry. Natural gas it had a wild winter there with what was going on with the weather, those big price spikes. It was phenomenal. Great trading opportunities when you get emotional spikes like that. But overall, commodities in general, they're all building these basing patterns. Some of them are starting to break to the upside. Doesn't matter if it's in energy or precious metals or agricultural. We've got, the whole commodity sector is firming up, and there's going to be some I think growth in all kinds of different commodities this year and next year.
Yeah, the food, the price of food, where that's headed, the grains and beef and pork. I mean, they've all just been hitting these highs. Yeah,
it's just
remarkable.
Yeah, coffee's showed us, there's a lot of commodities that have had a huge pop this winter, and they've all been pulling back for a few months. But everything seems to be settling down into a nice support zone. It looks like commodities across the board pretty much are going to post some pretty serious gains. I think this recent pop that we saw this winter in food commodities is the start of something much bigger.
Yeah, so you think this is a long-term trend here as well, with the droughts that we're having in California, Southwest U.S., and in Brazil as well, huh?
Yeah, I do. And a good ETF to play those, I like the GCC, the Greenhaven Continuous Commodity Contract. It holds, precious metals, natural gas, crude oil, a bunch of other stuff. It holds a basket of some pretty majors that seem to be all holding very strong, looking bullish long term. And the GCC ETF is settled right down into a nice support zone. It's just waiting for some type of reversal here. But I think it's a great way to get involved in the commodities market in general without having to handpick a couple individuals.
So that's the GCC. I'm not familiar with that one.
Yeah, it's just a basket of commodities that a fund manages, and it just kind of mirrors, obviously a blend of those commodities.
Mm-hmm. Huh. Interesting. So, that sounds like a good way to play it. And especially if you're convinced that long term, the food, energy, precious metals are headed higher. And what's your feeling about commodity cycles, Chris? I mean, does it go like 20 years or so up and 20 years down? Is that the way it works?
You know what? I don't go that far out on cycles. I think that stuff is way too big. Nobody even wants to ever really try and trade it. It's the slowest. You'll die waiting for the cycles to change. So I don't go that far out. I look more at seasonal and about 3 or 4 year cycles that seem to happen. Mm-hmm. And a cycle would be from a bottom to a bottom or a top to top. So you get a full down and up again all the way up. So
yeah. So you go a few years at a time, and that's where you make your money rather than going these huge long-term cycles, huh?
Yeah, exactly.
Yeah, because in the long run, we're all dead, right?
Yeah, you might as well make something work while you're still kicking. So,
yeah. Any other trends that you see there that look profitable and that you can take advantage of in the short run?
You know what? Those are kind of really. I'm focused on the commodities basket as a whole, and precious metals. I'm waiting for them to finish putting in a bottom, show some more life here. I have been watching the TAN, which is the solar sector ETF. It's really got some life going to it because we saw a big jump in oil prices in the last couple of weeks. Of course, higher oil prices makes people want to start to kind of go towards solar. So we've seen a big pop in solar. That whole sector's it's broken out. It's already in a very strong bull market right now, but it's been consolidating for a couple months, and it's just broken out as of this week. And all kinds of solar stocks are popping out of multi-month basing patterns, huge basing patterns. So that sector still has some pretty good room to grow, I think. And of course, there's an ETF that holds a basket of those stocks called TAN. So I do like that sector. Another one I like is the actual steel. The steel commodity itself, SLX. If you were to ever look at that has been forming a really nice basing pattern, and it's been holding up with some. I think it has yet to turn up. It's in a basing pattern, but again, it is set to more or less potentially double in price from where it is right now. And again, this is all kinds of commodities. The steel is just one of them, but there's all kinds of them forming the same pattern, same basing formation. And once they start to pop and rally, we're going to see commodity index just take off and soar.
Interesting. So these patterns just keep coming up and up again, and they're a dead giveaway, huh?
Yeah, and they all happen to be in the whole commodities sector. So that's why I think the whole commodities side of things is kind of where the money's going to be. Once the equities market really starts to top out, there's signs that the stock market here is getting very overbought. It is still in a strong uptrend. It's in an uptrend until proven wrong. So I think you just have to be aware that putting new money in at these levels for the U.S. stock market is extremely pricey. And I don't think you really need to be dumping in a lot of money. I think sitting in cash or focusing possibly on getting into some bonds is the way to go going forward for now, until we get a market correction. And once more stocks start to pull back, fear is going to set in. People are going to move into precious metals. They're going to go to the safer stocks, not so much the NASDAQ and the Russell 2000 stocks. They're going to move to the large blue chips. They're going to go to the Dow, SP 500 type stocks. So we're going to see those hold up a little better. Market's going to get choppy. Eventually, people are going to give up and say, you know what? I want something physical. I don't want any more of this paper money. I want commodities. And that's when we usually see the commodities really pick up speed. And they always happen to be strong right at the end of a stock bull market. So all this is slowly coming together. It's a process. It's not an event. So, month after month, you get closer and closer, and you got to wait for it to unfold, but it's coming.
Yeah. So like you say, it's a process, not an event. I like that. I like that because a process is made up of a series of events, right?
Exactly. Yeah.
So patience and just follow the charts, right?
Yeah, you got it.
Yeah. And any other advice that you would offer at this point? Because, people do tend to lose your perspective when you're watching these things day in and day out. And how do you keep your objectivity? How do you just keep it together and, not do something stupid?
Yeah, you know what? It's tough. If you don't have a technical knowledge and don't understand how to read trends and know when something has, reversed this trend, when you should actually just get out. Being in cash is a great position. And when the market does turn around, you have three options. Most people just sit there and hold and are, a deer in the headlights, and they watch their value.
I've been there.
They watch, their money just devalue and diminish their portfolio every week. Or you go to cash and you just sit tight until, you're comfortable and that maybe a new bull market has started or a new uptrend has started. Or you get aggressive and you actually play the downside of the market. You either trade inverse ETFs, which rise in value as the stock market falls, or you can short the market depending on your level of expertise. And you can make a fortune in a falling market. I specialize. I love shorting the market or buying inverse ETFs. On some of the biggest up days in the equities market, I'm actually sitting there cherry picking to go for a short intraday trade. It's just the way I am. I just can spot short-term market tops, and I love to play the downside because the market will be grinding up slowly all day, and then you can get short. You get this huge couple down bars. You can make your money really quick. And it's the same in a bear market. The market will rise up for a couple weeks, and then it just gets clobbered, and the bottom falls out, and you can make a fortune in about a quarter the amount of time as it would if you were to be long. Stocks take 7-8 days to go up. They take 2 days to evaporate all those gains. So
amazing.
In a bear market, once you understand it, you play these bounces in the market and you just watch the bottom fall out. Everybody's panicking and you're cheering and doing the dance. So it's kind of how it goes.
Yeah, you got to have that temperament. Well, Chris, just tell us where we find you again and how do we subscribe?
Sure. Yeah. You can go to thegoldandoilguy.com and you can get on the free newsletter. I send out all kinds of free trade ideas every week. You can get all my recent articles. I do educational videos. Just sign up to the free newsletter. I have a premium newsletter there also if you actually want the trades that I'm taking with subscribers. Again, it's thegoldandoilguy.com. And if you have any emails or any questions, just email me and I'll always get back to you.
All right. And check out the link on the financialsurvivalnetwork.com and sign up for our free newsletter. And Chris, always a pleasure. Thanks so much for being on.
Thank you, Kerry. It was great. Great talking to you again.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.